Hey everybody, BT here. I want to go over a particular setup that caught my eye on Friday, and I want to make the video before the expected move occurs, whether it moves down or whether it moves up. I want to post this video also for the public to kind of give them an idea of what we look for in the Forex trading room that we host in Euro session as well as the US session daily. This is a chart of the pound versus the Australian dollar. That symbol is GBP / AUD. Now, this particular pair carries anywhere between a 3.5 pip spread if you're using something like City Pro FX, which is the pro account. They give you a little bit better spreads than if you just open up the basic account, which has about 10,000. If you want to have better spreads, you need 50,000 USD or more. Needless to say, expect a spread anywhere between 3.5 pips all the way up to 8 pips on this pair. So this is not the type of pair that I would like to enter just looking for a scalp. Okay, because again, by the time you enter, you've already given up between 3.5 to, let's say, 8 pips, depending upon your broker. So the sort of trade that I'm looking for is one that carries a significant stop, but then you get the target is pretty significant. Okay, and I'll show you what I mean as we look at the 4-hour chart here. First off, pattern. We have a very clear head and shoulders pattern where we have the shoulder on the left here. Okay, we have the head very clear here in the middle, and we have the shoulder here very visible on the right hand side. Now, it's not absolutely perfect, but it's near perfect. Now, what else do we look for? Well, let's check different time frames and see what we got here. Now, when I go up to the 1-hour chart, and let me just get this in a better view for everybody here. I'm actually going to zoom out, and okay, once I zoom out, now we can see that this is the 1-hour chart. And you know what, I'm going to zoom out just a little bit more and then move this over. This way everybody can visualize this head and shoulders. Here's the shoulder on the left. Here is the head in the middle. Now this is a 1-hour chart. And here is the shoulder on the right hand side. Now, many traders will wait for the neckline break, and that, I think, is a great way to trade, okay, this particular pattern. Now you can see I placed a bunch of shorts here right on that neckline. Now, if we don't break lower, I'll just exit. Now, what I'd like to do is put the stop above this area. So really, an ideal stop would be about a 130. You can even come a little bit more. 173.50, 173.60, just kind of coming up here, because once we start to move up here, then all of a sudden all those traders that may have shorted this based upon this very clear head and shoulders pattern will start covering it. You can be sure that we're going to break higher if for some reason it fails. So having a stop, I think, up here, even if it's not above this right shoulder, is pretty intelligent. It's pretty much a given. Now let's talk about the target on a trade like this. Jump into the daily chart here. We do have a very clear trend line. All right, I drew this trend line. I mean, if you want to, you can make it a little bit more visible. I don't use MT4 a lot, but from what I see here, you're just kind of gonna go in, click properties, and just increase the visibility of this. Not a big deal. So yes, I am expecting us to come down and retest this trend line. If we do that, that's going to put us right around that 171. That would be my first target. My second target, which I outlined here, 170. So if it's a clear head and shoulders, and it no doubt stick with the textbook definition, it's actually going to clear the 170 and come a little bit lower. We're being very conservative in these estimates. Let's pretend that it works out, but not like a typical head and shoulders. Hey, I say we're still going to come down and have a good chance of touching this trend line. So I am going to set this to cover at 171 area on this pair, and I think that gives us a nice first target, and then we'll let some ride for that 170 area. Now I'll talk about, let's say you have the FIFO and you're dealing with a US account, okay, and you're dealing with a broker. One way to get around that is to simply use someone like not MyFX, I'm sorry, CityFX Pro, and then you don't have to deal with this FIFO nonsense. You can have one target set here, the second target can be set down here. But because of this FIFO, you have to have all your targets set at one particular area, and you have to have all your stops set at one particular area. That undermines many people's trading strategy, including mine. So again, most of my trading is done in the CityFX. If you want to get around that, do the CityFX like a bank account. You know, in the US, basically your only option if you're retail is Citibank. But let's say we just set this anyway, okay? A 173.60 would be the stop. We set that, and a 171. You can see now my stop is clear up here, and then we have that target. The ratio, okay, win-loss ratio is still pretty nice. If you really want to count on this head and shoulders working out, then I would say look for that 170, providing we break. Never any guarantees. Now, let's say you want to cover at a particular area, and then you want to, cover the second half at another area, and you can't preset because again, this FIFO nonsense. What you can do is maybe open a foreign demo account, and you can have that first target hit, and when it hits, have it send you an email. You can set MT4 to send you an email, kind of let you know, or just use your broker to kind of send you an alert. And then what you'll do is you'll manually take off the first one. When we come down to that second area of target, then you just manually take that off, and you put all the stops at one area. So it's definitely still doable to have winning strategies. We shouldn't use the FIFO as an excuse not to do very well in trading. So I'm not doing that. I'm just saying I prefer to set my my target sometimes at different areas and leave it alone. You can't do that here, but there's always ways around it. Anyway, I'm not going to elaborate any more on that. This is really just a video on this particular pattern. Let's track it and see if it works out. Not every pattern that looks very good and the next day works out. So it'll be very interesting to see what happens and if we break here and exactly where the traders start to cover and take profit. Once again, I'm looking for that 170, 107 area as my first target, and we'll see how it reacts at that area. And my second target, which I may leave a half or a quarter on, then we're looking at about 170. I think fundamentals also are following the fact that we're making a nice boost in the Aussie, and it's kind of looking a little weak on the end of the pound, as we just had some verbiage on Friday that the options are open according to Bank of England, all right, politicians, that they may consider further easing, completely contrary to what we heard a few weeks prior. So, hey, that's the markets for you. Let's play it as we see it. Be prudent out there. I'll try and make another video this week, and I wish everybody a great week in trading. Take care.